Join us now on the markets. Tom Lee, head of research at Fundstrat Global Advisors, chief investment officer at Fundstrat Capital. And the list goes on and on. Andy's a CNBC contributor. First post-election appearance that we've had. You knew Trump was going to win.
Well,
not many people did.
Yes, that's.
I'll give you credit. Are you saying you didn't? Maybe you didn't say it in so many words, but you said it.
Yes, I'd say that we were placing a lot more weight on what the betting markets were pointing to, and so and we, when we look at all the deltas,
and you saw it in the Trump trade,
yes.
And you saw it in Bitcoin,
correct,
and you saw it in sectors of the market that would benefit from.
That's right.
Presumably, but who knows from a Trump presidency. So 1,500 points out of the gate. More to come, or are we're already there?
I think we need to respect this move. I mean, there was a tremendous rally post-election, and it continued yesterday. I think it really does reflect a lot of money was taken out of the market because of the uncertainty around the election. And now we know that because of policy changes and animal spirits, that this is really going to benefit things like Bitcoin and small caps and regional banks and financials. So I do think there's still a lot of upside. I mean, small caps trade at 10 times median forward earnings. I mean, that's a...
So what do you think that should be, 12 times? I mean, what's the opportunity set in your mind?
Well, since 1987, small caps traded on a median PE basis at a premium to the S&P. The S&P is at 17 times. So I think small caps could, in the next couple years, outperform by more than 100%.
And what do you think about some of the macro issues that I think create a different level of uncertainty? We keep talking about the bond market and what that might be saying, what you think is happening with gold. Are the bond vigilantes going to be this governor on whatever you think is going to happen in Washington?
As James Carville famously said, the bond market is, everyone's scared of the bond market. So that is something we need to watch. But we've had plenty of periods where stocks have risen with bonds rising. And I kind of agree with Powell's assessment that it's not yields have gone up not because of inflation, but because there's sort of a change in growth expectations.
I thought that a sweep was, for either party, was the death knell for the markets and frightening to all involved. And now we're getting a sweep. Why isn't it more frightening? Maybe the sweep the other way would have been a little more frightening to some.
Yeah. I think part of the reason investors are getting somewhat optimistic is that President Trump is entering office again, but this time with a lot more knowledge of how to build a cabinet and a team. And so in some ways, this would end up being more market friendly. And I think that's why investors are becoming optimistic. I mean, I kind of agree with the idea that there are animal spirits growing.
Nvidia has become the talk of the stock market with its remarkable surge, driven predominantly by its AI-powered prowess. The tech giant is now on every savvy investor's radar, with fiscal 2025 third-quarter earnings just around the corner, set to release on November 20th. Nvidia's dominance in the AI GPU landscape has left competitors like AMD and Intel trailing behind, making it an intriguing subject of investment conversations. As tech companies gear up to invest heavily in AI infrastructure, Nvidia's stock might just be the golden ticket for forward-thinking investors. But why is Nvidia seen as the bellwether for AI investments, and what's keeping it ahead of its competitors? Welcome back, everyone, to Investocracy.
He'll never be deficit friendly, will he? I mean, he will be deficit friendly. He won't be, if we cut taxes on tips, Social Security, overtime, remove the SALT cap, extend the tax cuts. If you do all those things, that seems like...
It's going to be very difficult to fix the deficit with just changes in taxes and spending. But it's probably why Bitcoin is kind of interesting here, because it's potentially a Treasury reserve asset. And, if Bitcoin rises in price, it actually helps offset the liabilities, which is the deficit.
So you were at 150, I think, on Bitcoin, weren't you? But
yeah.
Not necessarily by the end of this year, or?
I think six figures is still possible before the end of the year, yeah.
And then more next year and the year after?
Yeah, I think because now, post-halving and now Bitcoin's becoming a lot more relevant, and I think maybe the regulatory overhang is diminishing, that there's a lot of upside from here, yes.
Okay, S&P, end of next year.
Well, between now and year end, 5 to 10% is
More.
probably the base case, just because that's the type of rally post-election, and we have a dovish Fed and, the normal seasonals.
Is that the right move right now for the Fed?
I think inflation fighting war is largely over, and, the real rate is still too high. So I agree with Fed's view that we need to move towards neutral, which is towards 3%. So I think it is supportive of markets, and business investment has been constrained. So I think these things are positive.
So what about 2000? What's next year? Is that 25? They move so fast. They're like months now, the years. So what about 2025? So 5 to 10% more would put us well above.
Yeah, more than 6,000 before year end. I think at least for the foreseeable future.
No recession.
No recession, and
people want you to answer when I ask you a question. So what are you saying? 60, what hundred on the S&P?
I think well past like 6,700.
No,
sometime next year.
6,700.
Yeah, sometime next year, because
that's another 20%, isn't it?
Yeah, maybe 10, 15. Yeah, because margin debt hasn't really risen in the last 4 months, and the stock market's up. So we know investors haven't been adding risk. And now we have earnings visibility, and we have a continued dovish Fed, and then this election's behind us, so multiple tailwinds exist.
Wow. You're pretty bullish.
I think I'm pretty positive on the U.S. and fundamentals, yes.
Okay, good.
In the bustling arena of the AI chip market, Nvidia continues to crush its competition. While AMD and Intel try to ramp up their presence, they are but shadows in comparison to Nvidia's prowess. AMD anticipated a $5 billion revenue from AI GPUs in 2024, a minor fraction compared to Nvidia's colossal $84 billion forecast for the year. Intel, on the other hand, is struggling to hit a modest $500 million target. These figures highlight Nvidia's firm grip over the AI GPU market, boasting more than 90% control. Nvidia's success story reads like a modern-day David and Goliath tale, with its GPUs forming the backbone of AI advancements worldwide. A joke often thrown in trading circles is that Nvidia doesn't just have the competitive edge, it has a whole gilded sword. As tech giants like Microsoft and Meta platforms increase their capital expenditure on AI infrastructure, Nvidia stands as the chief benefactor of this spending spree. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
A reminder, there is a change, as Joe said at the top of the show. Today, keep talking about the Dow Jones Industrial Average. It's different today. NVIDIA and Sherwin-Williams replacing Intel and Dow Inc., and it is effective for today's session. So when it starts, 9:30 this morning, those guys are in, the other guys are out.
I think that I hope NVIDIA is not an allegory for the entire market, Andrew. And by that I mean, here we are getting in at $3 trillion. It's made unbelievable moves. Is it going to go to $6 trillion? It might. It might. We don't know. With AI, there's a lot of. But then again, there's plenty of room if there's competition, or if it's not quite as exciting. If the futures aren't, I guess the future is bright for AI. You can't discount that. But here we are. And in the past, when it's happened, the companies have continued to do well, like Apple. I've just got.
But it's not like it's just in the market for the first time, and the only.
But in the Dow.
But it's. Most people, I think,
well, if it just stays where it is, right? But if it just stays where it is, it's going to be an achievement. If it goes down, every point, how much that takes off the Dow. I guess NVIDIA joins the Dow Jones Industrial Average today. Joining us now to discuss this milestone and what the incoming Trump administration could mean for the chip sector is Chris Kessel. He is Wolfe Research senior analyst, and anything we talk about in trying to handicap things, whether it's retail or things made in China, it's all difficult to discern what's going to happen until it actually happens in a new administration. What are you expecting, Chris?
Well, I mean, the first part is, as you say, as we knew from the last Trump administration, whatever we thought one week, it changes the next. So it's unpredictable to start. But there's really kind of three things that we're watching here. One is, further restrictions on equipment sold into China, AI restrictions, and then what happens with tariffs. And on the first one, on the equipment, there's already a lot of restrictions in place. And in fact, it sounds like, there were going to be more restrictions before the end of the year by the existing administration. But China is already very, very significantly hampered in what they can produce already. So any other restrictions from here, it's either kind of tweaking along the edges or a full stop, and a full stop hasn't been on the table. With AI, similarly, Nvidia can only ship into China about what Huawei can do themselves. So if you put additional restrictions on what Nvidia can ship into China, well, that's just going to move a lot of business to Huawei. So it doesn't have a lot of effect. And on the third thing, on tariffs, there's actually not a lot of semiconductors that come directly into the U.S. from China. As an example of iPhone, the chips are made in Taiwan. They go to China for assembly, and they come back to the U.S. in a fully manufactured iPhone. So, because of that, we kind of see tweaking along the edges, but not huge impact on the chip industry.
Recent earnings reports from tech behemoths like Microsoft reveal a heavier inclination towards AI-focused expenditures, with a staggering $20 billion spent in fiscal 2025's first quarter alone. Meta Platforms isn't trailing far behind, adjusting its expenditure to align with the AI wave, the consistent demand for AI hardware signals enduring growth for Nvidia. Analysts expect Nvidia to report $32.9 billion in revenue for fiscal Q3, potentially setting the stage for a surge in its stock price post-announcement. Nvidia's strategic pricing at 35 times forward earnings further bolsters its case as an attractive option, especially when juxtaposed with an industry average of 45. The crux of Nvidia's current momentum lies in its groundbreaking GPU portfolio, notably the new Blackwell architecture. With GPUs like the H100 and upcoming H200 nodes leading the charge, performance and efficiency reach unprecedented levels. The Blackwell chips alone mark a 30-fold increase in AI inference capabilities. Tech luminaries, such as Amazon and Microsoft, are not only customers but also allies in expanding Nvidia's reach to more developers. The anticipation is palpable, as the fiscal 2025 third quarter results could set new benchmarks for Nvidia and instigate a rally. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Chris, were you a proponent, supporter of the CHIPS Act? And do you think that it's been a success at this point? I know it's still early. And do you think the Trump administration is going to try, is this one of the things, if they do win the House, the Republicans, that they're going to try and reverse?
Joe, my view on the CHIPS Act was a bit mixed. There definitely was a real imperative to diversify production outside of Taiwan for obvious geopolitical reasons. The world woke up, so we're overexposed to this one country. That's probably not a good idea. And so the CHIPS Act helped that. However, as the money was dispersed, if you remember at the time when the CHIPS Act was being contemplated, it was about, automotive semiconductors being in shortage, and, we need to encourage investment. And now we've got way more automotive semiconductors than we need, which is often what happens when government acts. But the money that was spent on manufacturing would have been spent anyway if the CHIPS Act never existed. It did encourage perhaps a little more investment in the U.S., but even that, Apple knew that they needed TSMC to diversify outside of Taiwan. They would have made TSMC do it, with CHIPS Act money or not. But Singapore, for example, is a popular destination for new semiconductor facilities. Part of it is, it's friendly to business, it's low tax rates, and they incentivize their business too. So the CHIPS Act in some sense, just kind of levels the playing field of the U.S. versus the rest of the world in terms of the incentives that governments provide for what's a pretty important business.
Right. It is industrial policy, but Trump has some things that at least look like industrial policy that he's proposing as well. I don't. So you said it was mixed. I think what you finally said was because other countries are doing it, we might as well do it to level up our playing field, but we're not very good at it.
Well, yeah. I mean, all industrial policy, is the money being sent to the right companies for the right reasons?
You mean Intel?
Well,
they could use the money. Maybe we're lucky we sent it to them. It appears they really need it now. And our view in Intel is we're buying coffee again for their employees, so I got that going for us. Then tea, depending on your preference.
In the current stock market scenario, Nvidia stands as a compelling option for investors eager to capitalize on the AI revolution, as the demand trajectory for AI GPUs is unmistakably upward. Nvidia's strategic positioning promises substantial returns, with projected earnings reflecting on solid fundamentals and indications pointing toward continued sector leadership. Now might be a prudent time to consider investing in Nvidia before its earnings announcements pave the way for further stock appreciation. As Nvidia gears up to disclose its latest financial performance, the stakes are high. If the company manages to exceed Wall Street's forecast of $32.9 billion in Q3 revenue, it's poised for a potentially significant stock movement. Holding fast to a forward-thinking vision and unparalleled market share, Nvidia's role as the fulcrum of AI investments remains undisputed. What do you think about Nvidia's trajectory in AI? Is it the right time to dive in as an investor? Share your thoughts as the world of stock watching eagerly awaits Nvidia's upcoming revelation. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.